Welcome to Magnet Minutes. It's October 4th. We have a special guest. It's Dylan Jovine. I came across Dylan recently. First of all, Dylan, thanks so much for joining us.
Thank you. It's a pleasure to be on. I appreciate it.
So, Dylan, I've been at this a long time, but I'm still a student of the market. Over some weekend work, I was watching a Mark Minervini interview. He mentioned Mark Ritchie. It was actually something that you had done. I thought you ran a fascinating discussion. So I know you have the website Behind the Markets. Before we get into some other questions, maybe you want to just talk about Behind the Markets, what it is, your website, a little bit about you, and then we'll get into some real market chew.
Yeah, so well, we started Behind the Markets in 2018 because we thought that there were CNBC and the Journal, they're talking about the same 300, 400 companies every single day. They're talking about, Amazon, Google, all the regular cast of characters, Meta, whatever, Nvidia now. So they're always talking about the same cast of characters. And, there's what, 12,000 publicly traded companies out there. So we thought to ourselves, why not talk about the companies that nobody else is talking about, that are not being covered in the mainstream media? So, I have a background on Wall Street. I've been on Wall Street and in this business for 30 years. So, what we decided to do is, focus on smaller companies, mid cap specifically is kind of our sweet spot, and really bring stories out there that the big media is not covering. For example, everybody's talking about chat GPT and all this other stuff for these years. We were really focused on how is AI affecting warfare? How is the military using AI in this contest, this geopolitical contest with China? People are talking about AI and image stuff. We're thinking, how is AI revolutionizing healthcare? So we're trying to talk about, also, what does the rise of China mean for us as a nation? What kind of multidimensional threats and opportunities does it pose? So we've been talking about that for years. A lot of people still don't know that Taiwan makes 90% of the advanced semiconductors, out there. So we were really one of the early groups bringing that to the mass market, that kind of discussions of trying to make a move on Taiwan. That's like cutting off the oil supply. It's modern day oil. This is critical. These are the chips that make our F-35s fly. So this is actually quite a national security issue. And it's been something that we've been pounding the table on. So we're looking at a lot of these very, very big issues from a different lens than most of the big financial press is looking at them through.
Right. Hey, I love that introduction. And Dylan, let me share. I've done a lot of these buy, hold, and sells on these networks. You could actually say before they call in what 3 or 4 stocks, depending on the cycle. And just like you say, not only is the focus on just a couple companies, but what's interesting is they have 500 analysts and everyone's following them. It's on main and broad. And the inefficiencies in the market are lower down.
Absolutely.
And so when you sometimes you'll sacrifice liquidity for knowing something that other people don't. And I've even early in my career, Dylan, I did a lot of sub micro caps. And I was the first guy in. I realized you really need the institutions, to be helping you. So you mentioned a couple topics. I've got a couple things I really want to talk to you about. With your experience, I think it's a great conversation. But right now, there's the most important conversation that keeps coming up is the Fed, the Fed, the Fed. My first house, we had a 9% mortgage. The 80s saw interest rates, higher than this for the whole decade. It was a pretty good decade. But there's a lot of inexperienced investors, inexperienced money that were trained on 0% free money. We knew it shouldn't have lasted as long as it did. It kind of created some of the problems. But maybe I'll get your take on what's going on with the Fed, and should we be as focused on it, and then maybe what's next?
Yeah, I view this as the headline for me is a return to normal.
Right.
There was an article in Barron's a couple of weeks back where I forget the analyst's name, and I do not want to do a disservice to this person. Somebody from Morgan Stanley, I think, actually calculated the average 30-year interest rate since 1790.
Wow.
and the average is 4.9%. So that is the average interest rate. That's normal. And look, I mean, financial bubbles and cheap money are created by cheap money and parties. So it's kind of like we're in a situation right now where it's like being at a party at 4 in the morning when all of a sudden having a great time, everybody's hit the punch bowl a lot, and then all of a sudden the music stops and the lights go on. And you realize the person that you were talking to doesn't look the same way with the lights on as they did when it was dark. So
Wow.
we're at that phase of the market where the Fed, it really sunk in that the lights were on and the party was over. And there's a lot of reasons for that. I mean, look, there was a distortion in the market when you see assets like crypto running wild. That's you could tell that there's a distortion. I remember Ben Graham's book Security Analysis. He said that you could always tell the end of a bull market by the quality of companies that are going public, and meaning that early on in a bull market, the best flights take off the runway, but at the end of the
Yep.
bull market, the flights that these banks are taking public are garbage. So
Right.
they're all speculative and crazy, and and it's the same thing in our business. You look at the crazy money that chased a lot of those coins and all this stuff. That's a
Right.
symptom of really, really cheap money run amok. So again, for me, this is the return to normal. I can't imagine a world where the Fed lowers rates anytime soon. I mean, look at the UAD. The UAW is on strike, and what they're pushing is for the automakers to raise their wages by 40%. That's inflationary. California just mandated McDonald's and restaurant companies to pay $20 minimum wage. That's inflationary. I mean, the Fed's got to toe the line because, as you mentioned earlier, you're talking about the 80s, but the 70s, every time the Fed took its foot off the gas, interest rates came back worse. Inflation came back worse. So if there's any lesson that I hope they learned from the 70s is don't take your foot off the throat of this thing until it is dead. And it's not
Right.
dead.
Right. And Dylan, one of my points is that there's something actually in the stock market called an earnings yield.
Sure.
And it doesn't mean at 5% that the stock market is terrible. It means you have to actually buy companies that, I'm a
Yeah.
quant guy, they have to have revenue and margins and cash flow.
Sure.
And if they have a certain niche in the market, they can be great investments if interest rates are even a little higher than this. So, your point is extremely well taken. And the thing is that I remember I was doing an interview for, I think, CNBC on the floor when the Fed announced zero interest rates for the
Wow.
sustainable future. We all looked at each other and like, what? Now we thought
Mm.
that was going to be
Yeah.
6 months, 9 months. It's an emergency rescue plan. No one anticipated it to be 5, 6 years of zero, and that was just a kind of a dumb idea. But so
Yeah,
I
it
want
was.
to actually now move behind the markets a little bit deeper in terms of what you're looking at. And so specifically I want to just bring this up. I have a mathematical model that I use. It's my expectations, but then there's something I like to call the box score. What's really actually happening
Mm.
day to day? What's moving on volume? What's breaking out of bases? And so we all want something to happen, but it's more important to understand what is happening and kind
Mm.
of go with that flow a little bit. So maybe you have any take on that comment?
Well, I'll tell you, I so timing is important, and I have a friend of mine, Chris Rowe, who might be great for this podcast because an investor's intelligence guy, a Dorsey Wright guy, one of these old guys. He's always looking at the trend under the trend, the buy sell signals and all that kind of stuff. But I was actually taught under the Buffett school. That's the intellectual village I come from. So, for example, this year, well, everybody was running and chasing, clean energy, which there's a ton of money to be made there, obviously. We were looking at the ugly girl that all the guys left behind,
Oh,
coal, right? So Consol Energy, which has been, such a big winner for us this year, and gas companies. I mean, basically, that was the cheapest sector in the S&P. So I tend to like, if it's not a really solid, if I don't really understand the business, I tend not to touch it. But when it comes to biotechs where they aren't driven by true cash flow, I mean, Consol Energy was trading at 3 times free cash flow you know,
I
6
saw it
months
the
ago.
whole
It's
way, right? There's no
crazy.
doubt.
Yeah, it was crazy. You know, so that was a gimme, no brainer, you know, to buy that kind of business at that kind of valuation. But I use technical analysis mostly for biotechs. You know, let's say they're and this is the area, one area of the market where I more speculate in. You know, really late phase two, phase three biotechs, where you know they're not driving cash. You can't do a discounted cash flow valuation on what the you know, you can estimate what the drug upon approval would be worth and the market size and all that kind of stuff. But you know, it's going to be for me driven a lot more by technicals. You know, where I can see what are the fingerprints going on, what's happening underneath the water, and I think that's a very very good model. So that model can help, like Console Energy. I bought it and it went down for a bit, but I was okay with that. So if I use a model like yours, you know, I buy it when it's breaking out, you know, when it's actually the right time. So you'll get a better time for your money than I will. But, you know, again, we all have to follow our own system. You know, it's how I got here.
Right, but so you know, you're bringing up so many things, and so I will share with you, and I'll do it off camera because you know I do follow my model, but I'm a student of what goes on. So one of my special situations is a biotech, which is I think technically perfect, which has, this might sound nutty, 40 days of short interest
Oh,
with a
yeah.
relative
Wow.
strength of 95.
What's
And
can you
so
say the name of the company?
no, I don't want to do it on
Okay.
air right
Okay.
now because we
Fair
own a
enough.
lot. I'll
Yeah.
share it to you another time.
Fair
It's
enough.
one of these things that I know, and I'm in touch with management. So what it is, and this is what I'm really important point I'm getting at is I do follow my model. I am super disciplined, but you'd have to be crazy not to see something going on in the box score
Yeah.
and take advantage of it because you know one of the, I'm sure you know the Ned Davis name,
Sure.
and he likes to say, you want to be right or want to make money. And
Yeah.
our
Yeah.
goal in the
Yeah.
stock
Yeah.
market is to make money.
100%.
So
100%.
so let me just ask you this other question. This gets a little bit deeper, all right? But um, people talk about charts, charts, charts. And what I've learned, and I use charts every day, so I'm not making fun of them. I need them. The point is, you can keep changing the time frame from weekly to daily to 8 days. Find a 6 day, a 3 day. Find something that tells your story. When you want to go long, what's your sequence? Is it weekly then daily? Is it daily then weekly? You know, what's your kind of sequence in using charts?
Well, you know, I grew up, when I started working on Wall Street in late 91, 92. I used to get those investors business daily charts in the mail.
Flip
My
books,
boss
the
did.
blue and the
The
green, the blue
books,
and the green
right?
books.
That's right, the green one. And my job, and those were 52-week charts, you know.
Yep,
So
that's
my
correct.
job, I had to sit there with a ruler and a pencil and plot a bunch of them for the week, which was terribly painful. You know, I was an analyst assistant. You
Hmm.
know, and I thought it was the greatest thing in the world because I get to learn about the company and I see the little blurb and, you know, I sit there. So I got trained on 52-week charts, you know, but again, I'm not a day trader. I'm not a fast money trader. You know, for me, you know, buying something and capturing a longer trend, but, you know, because this is an earnings, you have 3 quarters, 4 quarters in a year. So it seems to me a 52-week chart will give you the best information relative to a quarter from my time frame, my holding time. But if you're holding, you know, I know guys, plenty of guys that trade successfully, you know, well, they're trading a lot shorter time frame. So if you're trading a short time frame, you know, I would imagine a different chart would be in your wheelhouse. What
Right,
about you? What do you
right. So
use?
I have to tell you, you know, I was one of the last guys in the country, Dylan, to receive the blue and green books. And
Yeah,
they said, we have to stop sending them to you. Everything's gone online. And I said,
right,
no, please keep sending them
right,
to me.
right.
Then eventually they said, you're the last guy receiving them.
Wow.
You're not getting them anymore. Sorry, pal. It's all
Yeah,
digital. But Dylan, when those blue and green books came every week, it was one of the
yeah,
highlights because we dug
yeah.
right
Me
into
too.
them
Yeah.
and just a whole lot of fun in this
I
discussion.
actually, you know, that's actually how I became a value investor. So the guy, when my first gig on Wall Street was, I was in a, well, basically I wanted to go into sales because that's where the guys were making money. But you know, I was working as an assistant to this analyst, and you know, I remember one day, you know, Comtronics. I don't know if you remember that name, CMPX. This is back in 92, 93, whatever. And
I missed
it
that
was a
one.
22 and three quarters or something. And he says to me,
Okay.
Dylan, this is it. It's breaking out. You look at the chart, you do this, you do that, and all this other stuff. And he wasn't a fundamental guy at all. He didn't use that in addition to technical, strictly technical analyst. And I was a broke kid from Queens, who got a lucky break, and he's wearing this, $50,000 Patek Philippe watch. So he tells me to buy Comtronics. I'm buying Comtronics, and I just scraped enough money together to have like $100,000 to my name, and I was going to get married. That money was going to go for the wedding. And I bought 5,000 shares of Comtronics, 22 and three quarters. And it was right around the holiday season.
You went the
And
whole boat.
because in my mind, I was going to be JP Morgan reincarnated.
Okay.
I was going to tell the future wife how genius I was. And we were going to cut, I had a hero complex. I was going to be the man, going to triple the
lesson
money.
coming. It's a tough
There's a
lesson
tough
coming.
lesson. There's a tough lesson coming. So of course I come in one Monday morning, and I go to the old Quotron machine, the little green box Quotron
Yep.
machine, and I hit CMPX. Of course, the first thing I look, and I see, and it says 2 and 3/4. And I'm like, and I keep hitting it again. What? This must be a mistake. So I start running to all the machines on the floor, and all of them say that. The traders start coming in. Yeah, it turns out there was fraud.
You know what? It's funny you're mentioning this one. It was a hardware company, and I think what happened was I'll go. I think what happened was I do know that I think I know the name where the insider never sold his stock, and he was caught on an airplane trying to leave the country, if I'm not mistaken.
Oh, I remember that. Is that the same one? See, I was just so shocked, because back then there was 5-day settlement between trades. And I said, I ran into the trading desk. Can you sell it? Can you sell it? There's no selling it.
Wait a second. You hadn't even settled. The stock hadn't even settled yet.
No, I didn't know that. I didn't really understand the rules back then. The stock had settled. This was like 6 or 7 days later. It just settled. So I was stuck with it. And I turned $110,000, whatever it was, into nothing, And what that taught me was always do the bet. I said, who understands investing in businesses and stocks at the highest level? That led me to Buffett, and that, then I started to really wind in and say, okay, this is about business analysis, So I started to really read all of his annual reports, all of his shareholder letters, everything he ever wrote. I started really dive down that. And then as I got older, I really synthesized a technical approach, starting with the fundamental approach, and I started unifying and creating my own theory for how to do this, which has served me very, very well.
Well, it's a fantastic story. Listen, Dylan, I'm so glad I reached out to you because, I'm going to have you on once in a while. I think there's a lot more to dig. And you mentioned the name Chris. I'll watch the video later and I'll get his name. Anyone you think with your level of experience, these are the conversations that it's not just about NVIDIA. And, one of the last things I want to mention here, one of the easiest things to learn is that whatever Wall Street is promoting the most, whatever it is the most, that's usually a short-term peak. If there's tons of biotech coming out, it's a little top in biotech. So I know how important AI is right now, but I'm making a joke that the attention span of the public is so short. They knew everyone could say AI. They knew everyone can remember it. They don't know what the heck it is. They haven't looked at it deeper. So it became this crazy thing of AI. You knew there was a little short-term, bubble popping there. So in any event, Dylan, if there's one more thing you want to share, we're going to wrap it up for now. And I just really can't wait for you to join again.
No, that's great. I just hope you have a wonderful weekend. And, as we slide through this new normal, the return to normalcy, it's like the housing market, the housing market, there's this really, it's been, housing sales have stopped as these buyers meet these sellers. They're waiting to come to a new level where they meet again. And I think that kind of thing is happening in the market. So we've been through this before. It's a readjustment. It'll get easier for anybody listening to this who's newer at this, at investing. Just be patient. This gets easier. We're just going through a cycle.
Well, you know what? It doesn't get easier without experience, and it's a matter of experience and reading and doing. And, I am a student of the market. one book came yesterday, the new Michael Lewis book, which I'm really
Mm.
looking forward to reading. Just like Buffett, I kind of read everything he's done. I happen
Oh,
to
he's
love
great.
Michael
Yeah.
Lewis, and you know what hasn't come yet? It's going to come soon. Is Dumb Money,
Mm.
which is another author. One of my favorites. Always tells a great tale. So
Speaking of books, I just ordered your book, Invest in the Now. These are inspirational quotes. I'm a big fan of quotes. So that Amazon tells me that'll be delivered tomorrow. So I
oh,
look forward to getting
fantastic!
it.
It's a fun book. It's less business than my original Magnet Investing, but investing now. Thanks for ordering it. I hope you like it. It's a mindset, and basically, the point of it is that I alluded to it before. We all kind of want something to happen. People will tell you what's going to happen in 5 years. They're imposters. They don't know what's going to happen in 5 years. The Invest in the Now is using my spreadsheets now, charts now to get a handle on what's happening now.
Mm.
And if it goes against me, one of the things that you didn't get to do in your first trade is, folks, use stop losses. The whole
Mm.
idea is make your investment. Don't be afraid to make it, but don't be afraid to take a small loss
Sure.
and keep the principal.
Good
One of the things
advice.
I like to talk about.
Great
So
advice.
it's
Thank you.
Dylan. Dylan, I really appreciate your time today. And your website again, it's Behind the Markets, but describe, is it
.com.
behindthemarkets.com or?
It's yeah, go for more www.behindthemarkets.com, all one word.
Well, fantastic. Great discussion. I can't wait to
Great
have you
talking to
on
you.
again.
All
And
right.
I can't wait to meet your friends as well. Thanks for your
All right,
time.
you take care. Have a good day. Bye.
All right. It's Jordan Kimmel signing off from Magnet Minutes. Special edition here. Thanks, Dylan, for your time. We'll see you
Thank you
soon.
again.